Welcome back. Pressure, pressure, pressure. That's what's happening in the market. Look at the list of losers on the Nifty. It's just kind of caving in as we speak. 200 plus points down. Bank Nifty's lost 1,000 plus now. No sign of a let up. 2.5% down on the Bank Nifty. ICICI Bank, SBI, HDFC Bank, Kotak Mahindra, and then you've got a Reliance to add to the woes. Contribution plate is in front of you. And apart from autos, basically nothing else is fighting on the upside. That's pretty much the shape of the market. Let's take the conversation forward. We have with us Satish Ramanathan, CIO, Equity at JM Financial Asset Management. Satish, good afternoon. Great to have you with us on the show. Difficult days in the run-up to the event. Is this just nerves? Do you think the markets will get back pretty much on track once the 1st of February is behind us? Or is the nature of the fall now beginning to perhaps concern you a bit?
Thanks for having me on board. A couple of things. I think what we need to bear in mind is that the Indian markets had outperformed for a significantly long period of time in 2022. And the other markets were actually falling way behind. And I think we are seeing a stage of normalization there. The second aspect is Indian valuations were very rich and we're trading well beyond their median valuations for an extended period of time, and we are probably seeing that correction come through. The third aspect that we need to bear in mind is that the market was really on one leg, which was domestic inflows. And once the interest rates started moving up, I think people have become nervous on the domestic inflow part of it. And FPI inflows haven't really come in to support the market. So it's a combination of all these factors. I think markets rightfully are a little nervous, and probably the valuation pullback is a good thing for the markets.
Okay. Morning, and thanks so much for joining in. Thoughts on the Adani Group and the kind of fall that we are seeing today, Satish?
Not to specifically discuss any particular group or anything of that sort, but this is a market where leveraged companies would in general be much more volatile than before, and therefore it makes sense to avoid groups that have leverage and focus on free cash flow companies. And that's been our fundamental philosophy at the fund house as well.
Okay. Hi, Satish. Morning. This is Pavitra. What are your thoughts on the IT companies? Because a lot of them posted good results. Yes, there is uncertainty about, the outlook as far as FY24 goes. But do you think that these stocks could have probably already seen the worst and they're just going to move higher from here?
In terms of the IT sector, I think there is a little bit of a relief rally coming in because the results were far better than expected. And the US cutback in employees in the tech sector is probably an indication that the attrition rates that we saw last year for IT companies may come down. And therefore, the wage pressure which Indian IT companies have been facing for the past 3 to 4 quarters comes under control. So it's a little bit of a relief rally. Valuations still are ahead of themselves, but the mid-cap IT stocks have probably come to reasonable value proposition.
Okay, so you're finding value in mid-cap IT. Just a sense of the way you've constructed the portfolio right now, what would be top overweights? What is it that you're most convinced of at the moment, irrespective of the budget?
Right. Irrespective of the budget, we think that the CapEx story and the export story would continue. We think that the engineering export story, India seems to stand out as one of the few countries that can grab that opportunity. And that's one. And we are a little underweight on financials, even though we like the earnings momentum. But we think it's a crowded trade, and therefore we are a little underweight on financials and no equal weight on IT sector.
All right, Satish, we'll leave it at that. Thank you very much for joining us and taking us through your outlook on the market and some of these individual sectors as well. We do have to get into a short break, but before that, it is time for the CNBC TV18 budget quiz. Remember, there are prizes to be won every day. We gave you the question at 9:14 a.m. today, but just in case you missed it, here is today's question. This finance minister asked SEBI in the budget speech to raise the minimum public shareholding in companies to 35% from 25%. And your options are Arun Jaitley, Piyush Goyal, Nirmala Sitharaman or Pranab Mukherjee. So send us your answers on Twitter. You can post your answer as a comment on the question tweet on CNBC TV18 News and use the hashtag budget with CNBC TV18. Hurry and send us your answers because we will be announcing the winner at 3 p.m. today.